Hello members, LA here. It is December 21st, 2014. We're getting kind of close to the end of the year. We saw a large move back to the upside. This market never fails to reward those who are willing to just buy the dips, right? And it doesn't disappoint this time either. 3.8% here, 2.4 there. You can see the Nasdaq in particular has been struggling compared to the Russell, but big moves all the way around, and that comes off of a big move right to the downside. If we go and we look at these indexes real quick, you had a spike down and then a spike right back up, and you know what that is. That's another one of those V-shaped moves, right, that we've seen so many times over and over and over that eventually lead to higher price. And we're going to talk about higher price as we go along here today. So let's dive into this and see what we got. If we look at it from a technical and a fundamental picture, and we think about the quick review here, what happened last week? The Fed changes the language, yet they didn't. All right, they moved from this ideal of a considerable period to something called patient. So in other words, they tell us that they're going to no longer wait a long time before they raise rates, yet they're going to be very patient about how they do it. In other words, they're going to be very data dependent, and they gave the market what it needed, and that is a patient Fed, a Fed that's not going to move right away to raise rates. And so if the market thinks the Fed isn't going to move right away, then they can keep playing and frolicking in the sun, and that's what they're doing. The other big thing that happened wasn't just that, it was oil. Oil finally found not so much a bottom, but at least some sort of a stability at some price level. Now, we've seen this before. It doesn't mean it's going to hold, and that's something I want to drive home here. So we've seen these spikes lower before, and then consolidation, but yet they don't hold. This is a consolidation that's happening now. It came down, made a low, missed it by a penny on the test. Had it got 1 penny lower, you'd have had a nice test on the daily to tell you that this thing's probably going to lift for a while. But we didn't get that. So that means that we could actually see this come back down and test immediately again. So that's a risk, right? Now, given the huge volume, I don't think it's going to break it if it does, and it probably would be positive if it did it. But that's the scenario. The main thing the market wants to see, though, is it just wants to see it stabilize. It doesn't have to go up. I've said that before, and I'll say it again. It just needs to quit going down. And once you get some sort of a low and you get some sort of a stabilization, then that allows the market to move. If you'd noticed on Thursday, oil traded lower, quite a bit lower actually. But on the same token, on the indexes, they traded quite a bit higher on Thursday. So you saw a divorce between those, whereas the week before, they were lockstep all the way down. Every time oil went down, market went down. Why that divergence? Because oil has, quote unquote, stabilized. Again, doesn't have to go up, just got to quit going down. And that allows these equities to move up. So I think you're going to see oil probably stabilize here, continue to move sideways to up, and allow these markets to move up. By doing that, the equity markets moved up, and in particular, the junk bonds got a nice lift, which up until then, the junk bonds were really starting to freak people out. So if we pull over to the junk, you can see the big spike back up. Now the junk bonds are coming back in to do a retest regen. So when I look at, oil, I look at this, as they come back up, it's after 6 bars. What does that mean? It's probably not going to get over this. It's probably going to fail up here. Come back down, set up some sort of an ABCD structure to try again, assuming oil can hold, right? Something like this. That's going to be one of the key things, not this week, but probably next week, is how does the bounce get bought or sold down in these levels, right? It just needs to stabilize. It has stabilized here. As long as it can, hold up into this support zone you see, right, on the retrace into this area somewhere between 37.75 to 38.5 or whatever, in that price range, then the markets can continue to move higher. So to me, that's another big piece of what happened last week, and is probably going to be a positive going forward, because I expect that to happen. A couple weeks ago, we talked about we could get a 4 to 5% pullback at any time. And what I was looking at when I was talking about that was I was looking at the retest regens on the swing point high. And so we got exactly that, right? We came back, we retested all the way back, and because we were coming back within 6 bars, you can always go right to the bottom of the bar, and that's exactly what it did. Went right to the bottom. Now the bad news is you had high volume when you did it. The good news is that it held and regenerating higher. That bad news I just spoke of, if you look at the daily chart, it doesn't look quite as bad, because on the daily chart you can see that most of that volume came in on the spike back up. So, if you look inside things, sometimes they look a little bit different than what you see on the outside. So even though we got a retest and it regenerated and we had the negative of the huge volume, it actually wasn't that bad. That pullback, though, came right back to where we thought it would. If you remember on, I think it was Wednesday, I specifically said in the notes that if you're not long or you don't have enough long exposure, this is the place that you should be buying. That was in Wednesday morning's notes, and you can always go back and check out those notes if you don't. I'm going to pop this up here and show you. There is the ability for you to go back at any point in time. And let's see here, trade with LA. Oh, I got to get logged in. Let me log in right quick. Well, once you log into the site, you come here. If you come back to here, there's these archives, right? And those archives, you can pop in here and you can see everything that has been said all week, all month, forever. And if you go back down here, you'll see what I was just talking about, and that is, as I specifically said, Wednesday morning, this is the point that you should think about exposure, because the risk is very low to the reward, and the probabilities are pretty good that we're going to hold on the weeklies. And that's exactly what happened. So on the negative side, it's really going to be about oil. If oil really starts to fall out of bed again, it's going to be a problem. As long as it holds up here, I think these equities are going to do what they want to do, which is to move higher into the end of the year. On the positive side, technically, the bullish retest regens, right, they generated higher. I just showed you that on the S&P. The support on the short time MTTFs now, this is going to be good, because if I pull up the S&P again and get the MTTF up, these are going to reset again as soon as we make new highs. And when they do that, it's going to reset them back to zero. You're not extended here, you won't be extended there, and what does that mean? That means you can crawl higher again. So the restriction, because remember, we were up about 65% again. When we were up here, we were up around 65% because we'd had a big move. Now you have the ability, I don't think we were 65, I think we were about 55 if I remember right. Now you have the ability to see this thing reset and move higher. So the MTTFs at least are not going to be a drag on this market. The other big thing, though, is the potential ABCD structures now that are in place. And let me show you that here on the weekly. If I pull this up, you've got this large ABCD structure now that, if we get over these highs, is going to fire. And that thing can take you much, much higher. And just how high, if I pop up this, you can see the dailies and the weeklies are the same. That's the low, that was the high, that was the pullback, this is the projection. That's the current price, this is the projection, 22.20, 7% higher. And if you just crawl across these and look at them, the Dow, 8.5%, 11.5% on the NASDAQ, 12 on the NDX. Big numbers on ABCD structures. Now all of those are just potential, but the one that it's already fired is the Russell. The Russell is already fired. In other words, it's not potential, it's just not done. Another 8% on the Russell, 1296 is the target. these are large numbers, folks. And if they actually start firing and pushing higher, we could see quite a bit higher prices. That's another 160 points or so on the Dow. But what, about 150 actually. Big numbers. Is it going to happen? Well, we don't know, but we've seen this market over and over, with this steady trend, push and push and push more. And when we don't think it can go that high, it does. And these ABCD structures that we've seen before, they eventually complete. And so we're talking about the weekly, we're talking about the intermediate term time frame, but we can see that as a potential target going forward. All the major indexes that were doing the bullish retest regens, they held. So if I pop those up, and we can look at, say, one of these, let's look at maybe the XLF, and let's put that one on a weekly real quick. You can see here it came back into this bar, lighter volume, holds, regenerating higher. So that is a big positive as well. Lastly, the world markets all kind of held their ranges, which is good. On the fundamental side, central bankers, of course, I've already talked about. The other two big fundamentals, though, is stock buybacks. You can see the buybacks continue to go up. I thought this was a nice chart that I ran across, so I pulled it out. Buybacks continue to push higher. That's a big piece of what changes the earnings per share ratios and allows this market to look quote-unquote cheap. The other thing, and there's a bunch of data here if you want to look at it, the other thing is the dividends, and that data is about this, and that is that the dividends keep getting pushed up. So, you can't earn any money in the banks, right? But you can earn it in dividends as long as stocks don't crash. And that's what has been happening, continues to be happening, and that also is a big positive. The only thing I would caution here is that if I look at this chart, it certainly looks like it's getting tight up here, right? And potentially could come back and start to roll back over like we've seen before. So, yeah, we're stretched up here. We haven't turned the corner yet, but it is something that, can you continue to increase dividends at this pace? And actually, that's what these numbers are about here. The past 12 months, what was the details here? It was 32, 29 is a median. The Q1 2010 was 33. EPS, is going up. It's getting to the point, though, it's stretched. And so I would be concerned whether or not that can continue. But those have been big positives. They continue to be positives until they roll over and we don't see companies increasing their dividends and we don't see companies buying back their stock. And I think that will happen once interest rates quit going down, or stay at these low levels. And so that, to me, is going to be the turning point with respect to how the market looks from a fundamental standpoint, probably. Because unless you get growth, right, you can't get the multiples to raise that earnings per share, to make that earnings per share number look right. The way it's looked right is you keep buying back the stock. At some point that may change. Now on the negative side, one thing that may start to happen pretty soon is this dollar. We've had the dollar so far, and let me pop up the dollar chart here. We've had the dollar, bear with me a second, let me grab it. We've had the dollar pushing higher, but yet, not taking off. Well, here it is on the weekly. You can see it's starting to push again. You put it on the daily, you can see it actually broke out. This has had a big run, right? Going back to, and we'll just pull up the monthly. This has had a huge run to the top side. And at this point, it's coming back up here to test these highs. It got over them. What's left? Well, now you're coming into this bar. The dollar, if it gets past this, it's going to try to go all the way back up here. When was the last time that happened? 2010. What happened back then? Well, you had a pretty big dump in the markets. So, the dollar itself, if it starts, well, not starts, but if it continues to move at this pace and just continues to escalate, fast moves in currencies, in large, widely used commodities, creates problems, ripples. And so I would be concerned about this over time if it continues. So, and the way you're going to see it is you're going to see it here. You're going to see companies come out and say it's starting to affect their bottom line. The other thing that's happened is most of the world on a negative side is just struggling, right? I mean, we're not seeing GDP growth in the world. It's only in the U.S., and that itself is a potential issue. What do I watch the coming week? I expect the Santa Claus rally to just keep grinding higher. I expect, or I want to see the NDX get over that breakdown bar. And so if I look at the NDX, it's this area, it's the 4,300. If you can get over that, and we hit it with volume on Friday, of course it was options expiration, but I try not to discount what caused what. If we get over it, that's the new highs. You got two of them sitting up there. That can propel this market quite a bit higher. And then, of course, oil needs to hold. Economics, earnings, really not much in the way of earnings yet. That's a couple weeks out, about 3 weeks. Our economic side, really not that much news. There's some scattering, but it's nothing big. Geopolitically, unless oil falls out of bed, I don't think there's an issue there. Bottom line, you got to expect this to happen. Santa Claus rally right up into the new year. The point is stay long, folks. For the most part, just stay long. And as we move closer to earnings, you should tighten up on those individual stocks that could get hurt on earnings, because that wild card is what the dollar impact is going to be, especially on large multinational corporations. Add weakness in the indexes and sectors, on weakness on the indexes and sectors, which is what we tried to do last week. In the portfolio itself, I just wanted to highlight, you can always read the details, but I want to highlight 3 stocks real quick this week and kind of wrap up with that. And, use this as I try to do most of the time, use it as an opportunity to just give you insight into my thinking of how, to trade around positions. So let's start with NXPI. This is our semiconductor. Now I want to look at the weekly first. So let me pop over there. Here's the high. You come back in, what are you doing? You're doing a retest regen off this high. So if I draw it in real quick, here's the trade. It comes back, and the question is will it hold? Well, it does. It holds with less volume compared to this one. So slightly less volume. Test it. What does it do? Flips around, goes back up. Now what's it want to do? It wants to break out. It wants to get back over the highs. As part of that, there's 2 swing point highs sitting here. If it gets over this area, right, this thing can shoot higher. And so the ideal here is let it try. There's nothing to do but to wait. See if it'll push higher. If it can get over that price point, then we get a nice move. And so that's in XPI. FB. Now FB, remember they had bad earnings the last time around. They got hit on their earnings, and that was back in this area back here. I told you at the time that was going to put us into a range trade when we didn't know where the bottom of the range was, but we found out right here when it wouldn't break down. So then we saw the spike up. Okay, now we got something to measure against. At that point, it was like, okay, I want to try to sell into strength. So if you remember, I put orders to sell into strength here. We didn't get filled. We waited too late and we didn't get filled. As it came back, I started raising the numbers. I raised them here, and then I raised them again up to here. Why is that? Well, because it's acting stronger than I thought it would. And as long as it acts stronger, I want to try to get top dollar. And it's not just this, it's the whole market. So why take it out at a lower price? What do we want to do? We want to take it out at a higher price. What does that do? Well, that frees you up for 2 things. One, if you take it out here and it retraces back in, does a retest regen back into here, right? Then you can pick it up back here. But if it breaks out and keeps going, right, then you try to buy the retrace into here, either before or after earnings, preferably after. So it gives you kind of a win-win situation. That's what you're always trying to set up. So now we've got our orders up here. We'll try to take it out at that higher price, and if it does, so much the better. That's what you want. If it doesn't, well, then we'll just have to see how it trades, and make our decisions, the next time. But I suspect it's going to get up there and test it. You got volume up there, and it's been showing positive. So that gives us the opportunity to get out at a better price. The last one's Google. And Google, as you know, has been a pain. Now, Google actually did something good too, and that is that it came down and it tested this low on a weekly and this low as well, and it held both on price. The bad news is it had more volume. What does that tell me? It tells me it's probably still in a range trade, and that range now is this area right up to somewhere else. Where's the somewhere else? Well, it could be off this low, it could be off of this, but it probably is going to come back and test this at some point. Where's some point? Well, it's probably earnings, because this thing got hit off of earnings back on October. So how does that tell me to trade it? Well, if I look at the daily, actually let me grab the daily. If I look at the daily, right now it's coming back to do a retest regen off the prior low. Just got into it. The good news is it got into it on Friday and held it. So that, and as a matter of fact, that is what saved it on a weekly, has some decent volume, right? But compared to what it's coming back into, it's not good enough. So what does that tell me? I want to sell into the strength. Where's the strength going to probably take me? To do a full retest regen. That's the 543 area up here. Why would I sell it there? Well, same thing we just talked about with Facebook. If I can sell out here, I can give myself a lot more options if it comes back to test this low, or even if it comes back to test this one. Right? It gives me more options on how to trade it. Well, what if it just keeps going up? Well, no problem. It's probably not going to break out up here. Probably going to come back into a retest regen off the breakout, right, off these highs, and allow you to get back in at basically the same price. So if you can't trade around it, right, then you're just stuck going up, going down, making nothing. You want to open up the options to where you have the win-win situation, and that's what I talked about in my first book. And if you haven't read the first book, it's not a bad book on money and risk management. That's what it was all about. Okay? Well, that's it for this week. That's where we stand. Big positive week. The market looks like it wants to grind higher now, and we're going to just try to grind with it. And hopefully that's where your head is. That's definitely where mine is. I hope you have a great holidays if I don't talk to you. And, we will be, I'll be around. We just won't be as active this week. Matter of fact, we'll try not to do anything. Just let it grind higher. Have a great one. Take care. And I'll see you next time.